This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia exported 6.547 million barrels per day, BPD, of crude oil in February, official data showed on Tuesday. Crude output for the month was 8.947 million barrels of oil per day. Monthly export figures are provided by Riyadh and other members of the Organization of the Petroleum Exporting Countries, OPEC, to the Joint Organizations Data Initiative, JODI, which publishes them on its website.
Oil prices rose on Tuesday as investors took advantage of the previous day's losses to cover short positions, though concerns persist over economic headwinds from tariffs and U.S. monetary policy that could dampen fuel demand. Brent crude futures rose 90 cents, or 1.4%, to $67.16 a barrel by 0901 GMT. The U.S. West Texas Intermediate crude contract for May, which expires on Tuesday, was up 97 cents, or 1.5%, at $64.05. The Brent and WTI benchmarks dropped more than 2% on Monday, as signs of progress in nuclear deal talks between the US and Iran helped to ease supply concerns.
Moving on to the top news in the energy sector.
The share of OPEC oil in India's imports fell to a record low in fiscal year 2024-25 as refiners continued to gorge on cheaper oil from Russia, the top oil supplier to New Delhi for the third straight year, data obtained from trade and industry sources showed. India, the world's third biggest oil importer and consumer, has been tapping Russian oil sold at a discount after Western nations imposed sanctions on Moscow over the Ukraine war. The South Asian nation imported an average of 4.88 million barrels per day, BPD, of oil in the fiscal year to March 2025, a growth of 5% over the previous year.
Increasing purchases of U.S. natural gas and oil is a focus of Taiwan's tariff talks with the United States, President Lai Ching-te said on Tuesday. Lai has pledged to seek a zero-tariff regime with the United States and buy more from and invest more in the country, as he seeks to head off U.S. President Donald Trump's wide-ranging import tariffs, most of which are currently on hold. Speaking to environmental groups in the presidential office, Lai called for support for the import of more energy from the United States. Next, we have the top news in metal markets. Crude steel output in Japan, the world's number 3 producer, fell 4.5% in fiscal 2024-25, weighed down by slack demand in construction and manufacturing as well as slow exports amid increasing exports from the world's top steel producer China. Output, which is not seasonally adjusted, slid to 82.95 million metric tons in the year ended March 31st, the third consecutive annual drop, the Japan Iron and Steel Federation said on Tuesday. Production was the lowest since fiscal 2020-21, when a demand collapse caused by the COVID-19 pandemic drove production to its lowest point in roughly 50 years, according to an analyst at the Federation.
Copper prices hit their highest in more than 2 weeks on Monday as a weaker dollar triggered fund buying, but traders doubt that upward momentum can be maintained while sentiment remains dominated by U.S. import tariffs. Levies imposed by President Donald Trump have dented the outlook for global economic growth and demand for industrial metals. Benchmark copper on the London Metal Exchange was up 1.5% at $9,325 a metric ton by 11:26 GMT after touching its highest since April 4 at $9,333.
We will now look at the top news in the agricultural sector.
Palm oil demand from top global buyers China and India is expected to increase as the vegetable oil is now reasonably priced compared to its rivals, the Malaysian Palm Oil Council, MPOC, said on Tuesday. Palm oil is now considered reasonably priced at 3,900 ringgit, $889 per metric ton, the MPOC said in a statement, adding that prices are expected to remain supported at that level, underpinned by a recovery in soybean oil prices. Crude palm oil had commanded a premium over crude soybean oil in the past year due to the tightening of supplies from supply disruption caused by floods and as Indonesia raised its biodiesel blending mandate to 40% this year. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.